Welcome to a new episode of the Built on Better Decisions podcast. Today, we're talking about what's happening in the Atlanta and Southeast industrial markets, what demand looks like right now, what's driving it, and how it's evolving as we move through the current cycle. We're also going to discuss how tenant behavior is changing, what users are looking for, how they're making decisions, and how that's shaping development on the ground. Joining me today are Douglas Biggs with Colliers, Bryce Weaver with BroadPoint Partners, and from our team at Taylor Mathis, Walker Wellford, and Hamilton Reynolds. Douglas Biggs is vice chair and a principal at Colliers, where he advises corporate real estate clients on office and industrial decisions across the United States. He leads a corporate services team in Atlanta and provides market insights across landlord and tenant leasing transactions and investment sales. For our conversation today, Douglas brings a national occupier and advisory perspective on how companies are reading the market and making real estate decisions under changing conditions. Bryce Weaver is co-founder and principal at BroadPoint Partners, brings more than 20 years of experience and over 25 million square feet of transaction expertise in industrial real estate. His background gives him a clear view into both tenant and landlord representation. So for this episode, Bryce adds a transaction-focused perspective on what's shaping the decisions of industrial users, owners, and investors in the current market environment. Walker Wellford is a partner and senior vice president of leasing at Taylor Mathis, where he oversees project leasing for both Taylor Mathis-owned properties and properties owned by our third-party institutional clients. His work includes broker and tenant relationships, lease negotiations, market analysis, and coordination with our tenant construction teams. Walker brings insights on what tenants are asking for, how demand is moving, and how leasing decisions are being made on the landlord side to enhance long-term asset performance. Hamilton Reynolds is a partner and president of the industrial division at Taylor Mathis. During his 30 years with Taylor Mathis, Hamilton has overseen development of industrial projects totaling more than 14 million square feet. So he brings to this episode an owner-minded perspective on industrial demand, market timing, and the decisions that determine whether or not a new development project makes sense. Douglas and Bryce, I appreciate both you guys being here. Y'all are among the top producing industrial brokers in Atlanta and are in the market every day representing tenants and or landlords, so you've got a real-time view into what's going on. Let's start with the current state of the industrial market. When you guys look at Atlanta in terms of vacancy, absorption, deliveries, rent growth, how would you describe where we are right now in the market cycle? And how does that compare to where we were pre-COVID and then what we saw in the past couple of years after the pandemic?
Yeah, thank you guys for having us. I think Bryce and I both are excited about seeing how this turns out. But as it relates to the Atlanta market, I'd probably generalize it, and Bryce, you can certainly have a separate opinion or add on, but like it's stabilizing and balancing very quickly. I think we're 8 to 9% vacancy versus, 4% out of, the pandemic, which we all know was unsustainable. Rates are still up, and I wouldn't be surprised as you all are looking at developing and building in this upcoming year. I mean, it seems like we're working through excess supply, and there's a lot of activity right now in the bulk space.
Yeah. Thanks very much, Andrew and team, for having us. One thing to put in where we are, it's come on pretty recently, is we had a couple of years that were slow following the post-pandemic sort of boom. But from 2020 to 2022, it's historically the best leasing years in Atlanta, we averaged 18 deals a year over 500,000 square feet. In the last 12 months alone, we've done 17 deals of that size, and we've got 9 pending right now. So if you look at this 12-month period, it's not a calendar year, we're going to blow the best years in Atlanta history out of the water from a bulk industrial perspective. And activity seems pretty steady across the spectrum of space as well. So it's not like it's only being run by bulk tenants. There's also good size and business distribution kind of across the across the board. The market feels very healthy. It's still recovering because of all the overbuilding, but very quickly recovering, to Douglas's point.
Yeah. And I don't know. I mean, from you all's perspective, if there's like a magic threshold of, from a vacancy standpoint, or kind of when do you start really digging in? Is it, 8%, you're not looking at doing anything, and then higher, or are you always actively looking for dirt?
Yeah, well, to some extent, we kind of look at it submarket to submarket because that may be the broader market vacancy rate, but one submarket may be outperforming the others. And, kind of depends on where we got sites that we're trying to figure out or that we got under control. Hamilton may be able to add to that.
No, yeah, I think that's right. We love seeing a low vacancy number, but we look much more closely at each submarket. We have our preferences on submarkets. Ones we generally stay away from, like East, I-20 East is not one that we've ever been particularly enthralled with. So, the top 2 or 3 submarkets are what we're going to focus on and really drill down a little more into the micro markets. And a lot of it's contingent on being able to find any dirt that's developable.
There's been a lot of talk about the growth in the Atlanta market. I guess Atlanta's now total market inventories just over 800 million square feet, which puts us in the top 5 industrial markets in the United States. So let's talk a minute about the key demand drivers that have contributed to the growth of the Atlanta market. Obviously, we've had sustained population growth for decades. We've had the recent boom in e-commerce. There's been a lot of major investment in infrastructure, highways, rail, air, seaport. So from y'all's perspective, how are these and other factors impacting the demand growth in Atlanta?
I would say all those factors you just brought forth, between the roadways, Hartsfield being the biggest in the world, although not maybe the hugest driver for industrial, the intermodal systems we have in Atlanta, the rail, along with the port of Savannah. I think Atlanta is the first place when tenants need a new facility or need a facility in the Southeast. The first place they have to look is Atlanta. Certain avenues, certain things may make them look at another market like Greenville or Charlotte, to a lesser extent Birmingham, or maybe down in the Florida markets. But the first place, we see tenants, they're going to try to see if Atlanta makes sense. The labor's always checks out pretty good here, and all the infrastructure is just hard to beat for a kind of the hub of the Southeast.
The price, is that driven by population or a combination of population, rail, interstates, et cetera?
I think maybe the thing that put Atlanta on the map is the roadways and the drive times and the ability to how many rooftops you can get out of Atlanta in a day, 2 days. And the population growth, certainly. The whole region's growing, but with that infrastructure combined with population growth, Atlanta just, I think, has a lot more expansion to do.
Bryce, do you think, I think historically Atlanta was always seen as the hub of the Southeast, and compared to a lot of other markets, I think was always seen as somewhat of a discount.
Yeah.
And then post-pandemic, our rents, everybody's grew. Do you get any sense from the tenants you work with that they look at Atlanta any differently now?
No, Atlanta's certainly grown in rents, and we've gotten closer to the more expensive markets around the country. But I'd say the vast majority of over 100,000 foot tenants in Atlanta have a facility in Dallas or Chicago or New Jersey or LA or all of the above. So at least 3 of those markets, they're paying more rent, a higher rent per square foot than they are in Atlanta. So we obviously have to negotiate. Tenants are always sensitive to what they're paying in rent. But generally speaking, usually Atlanta still grades out as one of the cheaper places to have a distribution center.
All right. Yeah.
Unless you go to tertiary something. Yeah.
I think historically, access to available land, Atlanta is always considered in the Southeast capital. It's one of the 5 or 6 markets that every bulk user and tenant is in. I mean, we've had historically a pro-business environment. It's an easy place to do business. And you can get to 80% of the U.S. population with a 2-day drive time. And not to mention, I mean, look at Savannah's growth and the port and how that's become a strong alternative to the West Coast ports. And
Yeah, I mean,
now when you've got Gainesville and the inland port, and there's that story, there's a lot of savings. And there's been, I think Gainesville just had that inland port's $135 million capital investment that the Port Authority is making. I mean, they're just making a lot of the right decisions to increase the infrastructure and have for some time.
On the inland port, Hamilton and I have discussed that some, and I don't know that we have come to a conclusion on what the long-term outlook is for that, if it will really drive tenants around those areas up in the Northwest and the newest one up in the Northeast. But are you seeing, either of you seeing tenants that are really focused on that?
Yes. I've had it come up on two different requirements. Proximity, and it's like a 30-mile.
Yeah.
After you get 30 miles, it's diminishing return. But we had one client say that going inland port could be $1,000 savings per trip. So it's come up recently, certainly.
So what's more important to them, access to the port or access to 85 on the Northeast side?
Well, as it has come up to me, it's been proximity to the inland port.
So they would rather be closer to the inland port than to I-85.
Again, I think for every mile, there's some diminishing return, but the one requirement I had was get as close to it as you can.
That's a drayage cost that they're drilling down on?
Sure. Yes. That's where the drayage is, where the savings is, as I understand it.
But I will say, we've got various buildings and parks up 95 and 85. We haven't seen it really driving our tenant activity yet, but I have heard other brokers say that they think this inland port and various economic development people that the inland port is going to have an impact up there and make a difference. But from a landlord perspective, I haven't seen it yet.
Now, how much runway Savannah got? We've all been blown away by what's happened with that Savannah market. It's a tiny city vis-a-vis Atlanta or Nashville, but how many millions of square feet of warehouse have been developed down there around Savannah over the past 15 years?
It's gone from 15 million square feet to, I haven't looked at the stats, probably close to 180 million square feet today in about that timeline. I will tell you, the thing that I wonder about Savannah is labor, and can they sustain that growth with the labor pool they have? We're working on 2 projects in Savannah right now, and there's a lot of vacancy down there at the moment. There's also a lot of industrial that is zoned and can be put into production relatively quickly. So a building spree could happen pretty quick. So Savannah's an interesting market. It's been very hot. It's got some activity again as it went through a couple-year downturn, a little bit like Atlanta, like most domestic cities. But it's got a lot of industrial, both product and land available. So it'll be interesting to see how it comes out of this return here.
Why are tenants wanting to be there? I mean, you've got on the port, you've got the 2 Class 1 railroads, CSX and Norfolk Southern. They both run trains to Atlanta every day to the intermodal yards up here. So what's driving the decisions for some of them to want to have distribution centers right down there on 95 and I-16 and generally in that Savannah market, as opposed to putting them in Atlanta or somewhere else inland?
A lot of the occupancy in Savannah are tenants that have buildings both in Savannah and in Atlanta. They're that big, like a Home Depot, Walmart, Amazon, things like that. One of my clients is in the energy business and obviously wants to be close to the waterway. My distribution client, though, kind of like Doug was saying about the inland port, they said within a certain distance of the port, it's a zero-sum game how far, because whatever distance they are from the port, they get closer to Atlanta and all their products go into Atlanta. So it's a variety of reasons, Andrew. I don't really represent anybody that has just been dedicated to being in Savannah. A lot of my clients use the intermodal to get their product from the port to Atlanta, and I think that's been a big driver for Atlanta. I don't have a lot of firsthand detail of why do they need a facility down there. I'm not totally sure. Douglas, maybe you know.
No, I don't. I mean, the client that we were talking about that had so much interest in getting proximity to the Gainesville inland port, they had no interest in looking at something in Savannah. So it's cheaper to use the inland port from Savannah and ship direct, and then just have proximity to Gainesville.
Circling back to e-commerce, we mentioned that the growth of e-commerce as a percentage of total U.S. retail sales has been exponential since the pandemic. I'm not sure what percentage it is right now, but there's still a lot of runway there. Y'all expect that will continue. You read about why e-commerce retailers have to have more warehouse space than brick and mortar retailers. Can y'all touch on that a little bit?
I can't imagine it's not going to have continued growth. Just as you look at the consumer preferences and how we all shop.
Right. And as percentage of retail, I think we're 17% or something, Andrew. And if you look at Europe or China, their percentages are much higher. They're ahead of us on where their population stand on buying things, e-com. And all the projections you read, if let's say we are at 17% according to the census I think I looked at this morning, everything projects to get to 30% of retail sales at some point, whether that's 2035 or 2040. And you look at all that growth that is going to come out of warehouses and not out of stores. And I think it's an absolute tailwind for the industrial market. I don't see it stopping. And we see a lot of it through the Chinese users right now. A lot of Chinese e-commerce is taking industrial space across the country right now. But the biggest occupier so far in the last 12 months has been Amazon. And maybe number two is Walmart or Google, all things that have at least some connectivity to e-com.
Yeah. So switch gears, talk about when tenants are making location decisions today, what are some of the key considerations and factors driving those decisions? We talked about where they want to be, but what about in terms of building design in addition to location?
What I'm seeing a lot of is, obviously the power needs for all of the robotics and the automation that are going into these buildings now and these warehouses are creating a lot of power demands that are not historically not the level of power that these warehouses are being built out with spec. Those same reasons, the robotics automation, the flatness of the floors seem to be important. Air circulation. I mean, they're wanting these buildings to have full building generators. I mean, tenants continue to want more trailer storage around the building. And then I think an interesting thing that we're seeing and a trend that kind of seems to be continue is employee amenities, the locker rooms and the break rooms. You guys remember it used to, even the truckers lounge had a fence in it. It looked like you were checking into Rikers or something. And now I toured a building in Las Vegas 6 months ago and they had a turf dog park in the truck court for the truckers' dogs. So it's just like continued to be, people are taking care of the customers and their employees.
Douglas, I've had 2 tours on a third-party leasing assignment I have up in the Northeast recently. Within the last 60 days, neither tenant needed air conditioning for their product or their process, like paper you would see with, needing the space conditioned. And I asked, and both of them said for employee retention and for general well-being of their employees.
I hadn't passed any 18-wheelers recently had dogs' heads sticking out. When you said all these truckers are riding around with their dogs now?
I think if you looked, a lot of the truckers have dogs. I mean, not only they roll the window down going down the highway, but they've got a little companion as they're spending four nights on the road.
Talking about the employee amenities, I guess October of last year, we finished a 350,000 square foot cross-dock distribution facility down in Milton, Florida, which is on I-10 just northeast of Pensacola. It was a build-to-suit for Buffalo Rock Company, which is one of the largest independent PepsiCo bottler and distributor, and they also distribute a lot of other brands, Keurig, Dr. Pepper, all kinds of stuff. But we were shocked when we got into that deal. Not only did they have 40,000 square feet of office space in the facility, which was constructed in a 2-story mezzanine, but the level of office finishes in there and the employee amenities were really nice. And it's interesting to hear y'all say that's becoming more and more important.
Yeah, I mean, to your point, even the finishes in some of these office spaces, I think, have continued to not feel like we, the 5 of us, historically would, it's higher end carpet and finishes in the break room and restrooms that are much higher than what I'm used to.
And as it relates to Taylor Mathis, I mean, the way your product looks, spec product, the nicer the bathrooms, the nicer the 3,000 feet of spec offices, it matters now in these tours. For the same reasons Doug was talking about. These guys want their people working in a pretty nice building.
Yeah, Price, we saw that with the spec offices in Brazelton.
Sure.
With glass walls and 12 to 14 foot ceilings.
Backsplash in the bathrooms, right?
Yeah. We moved our spec incrementally since I've been at Taylor Mathis for the office ceiling height from 9 to 10, and that was a big deal. And then recently on a spec, I think we went to 12 feet. I think Brazelton may have been at 12 or 14, but you definitely see it when a tenant comes in a space. Yeah, it's a business, but the people making decisions are people, and they're looking for environments that are appealing to them, that they can see themselves spending 10 hours a day in. That's meaningful.
I remember, I think everybody here on the call remembers Hamilton Mill was in a pretty unique location when they first started Hamilton Mill, and they built those buildings, they overbuilt those buildings and put stamped stone outside, and they leased them up like crazy. It was the first time I realized I think people, are starting to care what their warehouse looks like.
One of you guys mentioned more and more trailer parking spaces. We're trying to hit 185 feet minimums on truck court depths just so we can have ample trailer parking spaces. But, we're also building more auto parks. You have to have it. Not every tenant needs it. But if you've got a e-commerce tenant or somebody that's, got a fulfillment type operation in there, they got a lot more employees than other types of industrial users. So, we're building more auto parking than maybe twice as much as we were 10 years ago.
The only kind of reverse to that is the robotics and automation are coming. And so we've got some customers that when we're looking at spec buildings, the auto park is way over their requirement just because of how much robotics they've got in the space.
I'm curious, guys, y'all talk about amenities. As a developer, we're hyper focused on finding the right sites, and then we want to max out the buildings because all these properties are expensive, so much competition out there chasing sites. So would you recommend that as a developer, we focus more on amenities rather than square feet, truck court depth? I mean, should we carve out pieces of these sites to accommodate, I don't know, whatever, that dog park or
Soccer field,
picnic?
I think the covered outside area, I'm certainly seeing that being a requirement as we're going into spec buildings. Tenants are wanting that. It's not a smoking porch anymore. It's literally just, mental health, getting outside, having lunch outside, and tenants are requiring that, or at least wanting to see that as an area.
Yeah. Hamilton, I would say quality of building, parking, hitting those kind of specs are still more important than amenities. I would tell you one thing that you could do, and I don't think it would eat up that much land. I see more and more people walking around warehouse buildings these days. So if you could tout some kind of trail, and that doesn't eat up the parks, the plan, your footprint, your yield, I think that would be something I would try to build. I don't think I'd go build a dog park or a half a soccer field in Atlanta, at least.
Maybe at our Alatoona development, we could do a mountain climbing trail.
Yeah.
Sure.
Have a ropes course out there.
Yeah.
You've got that Alatoona product's got that commented best views in any truck court in town.
Price, you may be onto something with these walking trails because I guess everybody's reading the same stuff. I don't know if it's on social media or whatever about getting their steps in.
Getting their steps.
Walking. I go and walk around a parking deck here in our office building sometimes, and you get run over out there with people just walking up and down a parking decks. I ain't even thought about that on an industrial building. Have you seen a recent development that actually incorporated that?
I've seen it a couple times. I remember looking at a park in Clarksville, Tennessee that was touting it. I haven't seen many do it in Atlanta, but I remember seeing a few. I couldn't tell you who. I just know I almost don't go to a warehouse building where some employee or a couple, 2 or 3 of them aren't walking back and forth in the truck court these days.
Correct.
I think that would be one little amenity that wouldn't eat up too much land. You could put on a flyer and might grab somebody's attention.
Good idea.
Let's talk about clear heights. Nothing really changing there. I mean, obviously for the big box, everybody's doing 40, but for some of the smaller product, it wasn't too long ago when we were doing some of the smaller bay product with 28-foot clear heights. Now sort of the minimum's 32, 36 in between, and then 40 foot for the bigger bay stuff. Y'all seen any trends there one way or another?
No, nothing other than what you just said. I haven't really seen any trend of over 40 on the bulk right now.
I've seen a couple of flyers for bulk in other markets, Dallas and LA at 42. You wouldn't want to go build a new building at 800,000 feet at 36, right? That would be silly from a institutional investor standpoint and user. I still think though, there's plenty of users that can use 36-foot clear just fine. I've got a million-foot 36-foot clear building in the market now that I don't think we've been cut yet by a tenant. We've shown it 4 or 5 times because of ceiling height. So I still think it's almost more driven by the investor world than how many users really need to go from 36 to 40. 36, 100%. And again, IDI's building 2 buildings down in Fairburn that are 36.
To Price's point, I think it's more as the institutional investor that's buying the product, they're looking at buying an asset that's got a 10-year lease and just saying, okay, what is 36 going to look like in 2036?
So where do you
Yeah,
see the break point between 36 and 40?
Size wise?
Yeah.
350, 400.
Yeah, I was going to say 400.
At 350, I don't think you're doing anything wrong building 36.
If you backed in, the user's actually racking up to that level, and you get into, there's some sprinkler issues and everything else. I don't think as many people are using all the way to 40 as probably the perception is.
I think there's a spec building price, correct me if I'm wrong, down 85 South that's sub 200,000 feet that's at 36.
Yeah, that's just overkill in my opinion. And there's some pretty major dollar savings.
Be a separator on the tour of the survey, but I don't know if you're getting a rent premium.
Right. Yeah, Price, did we lose any prospects
No.
in Brazelton for being 32 for at 3
I mean,
billion?
we just made a 300,000 foot deal out there, and nobody they didn't sniff at 32. Yeah, we're not. We may have somewhere along the way, Hamilton, but you know how fast that park leased up.
You know, you read a lot about distributors transitioning their delivery fleets to electric vehicle, electric trucks. And of course, a lot of people are driving electric cars. I don't think we're putting any EV charging stations. Are we building that stuff right now, Hamilton, at our?
We put some in Brazelton.
Yeah, we put some in Brazelton.
I don't know how much use. You guys see much demand from the tenant side?
No, I think some of the material handling equipment, there may be some trends go in that, but no, not from a.
I think that's what California driven, but in my forum group, they bought some Tesla trucks, and he says they're really perform well. They got to run around between the Port of Los Angeles and Inland Empire, so they have enough charge to get there and back. They're pretty high on them, but they're expensive.
Yeah, that's interesting. I certainly think we're going to see it continue to expand the usage.
Have y'all seen any of the projects where y'all are, whether you're representing landlords or tenants, any projects in the Southeast that have got electric fleet charging for electric trucks, or is that not a thing here yet?
No, I haven't seen that yet in the Southeast. To Hamilton's point, certainly it's an Inland Empire, more of it, but it's just leading you to these warehouses are going to continue to need more and more power as we move forward.
So shifting gears a minute, we talked about tenant trends and building design trends. In terms of trends, in terms of demand for different industrial product types, we all do a lot in the Atlanta market, and you understand that historically this market's outpunched its weight as it relates to big box development and absorption relative to the market size. What do y'all think's driving that dynamic, and do you think it will continue? I know y'all Price talked a little bit about the big box absorption earlier on.
I think we're probably just trending to more big box industrial development over the foreseeable future. Atlanta being one of the 4 or 5 biggest hubs in the country, I don't see that changing. I think Dallas, Atlanta, certainly Inland Empire, we all took our bruises for a couple years after. So we had 2020 through 2022, then 23 and 24 were pretty rough, especially in the bulk sector. But I don't see the trend really changing. I felt like that was more like a Y2K. Everybody bought a computer and didn't need one for 2 or 3 years. So everybody got in their bulk warehouse or their bulk warehouses across the country and didn't need anything for a couple of years. And now they're back realizing they ignored their supply chain for a couple of years. They've got to get back to it. At least that's in my little micro desk is how it feels. But no, I think Atlanta will continue to do bulk. I think Atlanta has remained pretty consistent, maybe other than 23, and call it 100 to 250,000 square foot tenant demand. And then you go smaller than that, and there's not a lot of product for these smaller tenants to go to. So there's not been as much leasing activity smaller than 100. But we're chewing through the product now. And I think, honestly, in the foreseeable future, I also could see us having a supply problem in Atlanta and in other markets domestically.
On the bulk side.
I think across the board, Walker. I think it's harder now to put land in production than it was 5 years ago, 10 years ago, 20 years ago. And we know there's parts, submarkets in Atlanta, like Hamilton said, micro markets that could use some space pretty soon, but it's hard to get in there and get them entitled and go. So I really think by the end of this year, early next year, we could see a little bit of a supply problem.
I hope you're right, Price, but I have my doubts. There's so many of us out there chasing land sites. To put things into production. It's very difficult to hit the yields that we really need to hit. 125 bips over exits, and it's very hard to find stuff that underwrites.
That makes sense. Yeah.
Sure. Do you think that's any different than any of the major markets? Does that lead you all to be looking at any tertiary markets development?
And we always look at other markets in the Southeast, and I suspect we don't look at them probably as hard as some of the other regional developers do. And I suspect those are equally aggressively chased or pursued by those developers. I mean, I just don't get the sense that if you look at the biggest markets, that Dallas has the most vitality out there. It's really continued to really boom, primarily, I'm guessing, because of their population growth and business-friendly environment. It's made everybody want to be in Texas. I mean, Atlanta, I think we've got so many developers chasing deals or trying to find sites to underwrite that it's made it very difficult to find opportunities that make sense for us to develop. So I think Greenville, some of these tertiary markets got overbuilt. Greenville, I know, got overbuilt. Charlotte, maybe to some extent, but probably not as badly as Greenville did.
Well, what's been frustrating for us just in the past couple of years as we sort of reset after the post-pandemic years is, as Hamilton touched on, land prices have gone up precipitously. If you find a site, it's more and more difficult to zone it for industrial. A lot of counties and municipalities, some love it, but others becoming more and more sensitive to it. And everybody shows up to these public hearings and they don't want the more truck traffic. They just don't want it. So you got to figure out how to buy land for a price that works. Then you got to get the entitlements. And then with construction costs, what they were, it's very hard to get them to pencil out. So, I mean, our hit ratio in terms of new projects that we're pursuing, it's very hard to get them to the finish line.
With all the pushback on the data center space, are you competing actively, chasing dirt with data center providers?
Well, even if we're not competing actively on a site, it's a trickle-down effect. Everybody out there is looked at some of the land sale comps and seen the exorbitant prices that these data center, whether it's the hyperscaler or a data center developer, they can pay these insane prices for it. So all of a sudden, everybody that doesn't have a data center site thinks they do. The price per acre for land is just it's just kind of a little bit nuts. It certainly doesn't work for warehouse space.
Yeah, it is interesting. And we're zoning something right now down south side of town, and the neighborhood was actually less opposed to industrial than to data center,
that was my point.
So
Now the better alternative.
Yeah, it's so nonsensical because I'm fine with it, obviously, but it makes absolutely no sense because the data center is much less intrusive. Truck traffic, it is a little noise, but is it as much noise as a truck backing up with a meh going on?
But Hamilton, that data center is going to pull power from their house.
Yeah.
Is it?
No, it's not. That's the NIMBY.
Yeah. Right. Anyway, it's crazy.
A lot of it's, I don't know what it is, smoke and mirror stuff. Why they're opposed to data centers. You read about it in some places in the country. They've got moratoriums on data centers. I'm not what it is. The single family residential neighborhoods that are in the vicinity of a site that's being considered for data center, they become a pariah. It's like they think some kind of it's going to do something to them. I don't know. I don't understand it.
You just keep hearing all this generational wealth that's being created. I just think my son in 15 years is going to look at me and be like, Dad, what, you didn't think about getting in the data center game? So we'll have to see. I missed out.
Yeah, we had a site in Douglas County. I can't remember what it was. Maybe it was 2 or 3 buildings, Hamilton, Walker, about 900,000 square feet. We were going to do another business park for distribution space, and the neighborhood came out en masse and galvanized against it because of the truck traffic. And so we were throwing in the towel on it, and then a data center user showed up, said, "Hey, we'll buy your site." That got zoned. Obviously, the traffic impact study was very favorable for the neighborhood because it generated virtually no truck traffic, very little auto traffic. There's not many people working in those data centers. And so, yeah, we turned around and flipped it to the data center guys. But that particular neighborhood certainly liked that use better than industrial.
The other impact is there have been so many data center adjacent leasing warehouse space, like the suppliers and the contractors and even the Googles doing this. So it's definitely having an impact on our industrial industry.
We talked a little bit about big box, but I read an article in the, I guess it was the spring 2026 edition of NAIOP's magazine called Development, and they had an article in there that was titled "The Small Bay Surge at the Heart of the Industrial Market's Recovery." And the essence of the article was that smaller bay multi-tenant industrial buildings were making a big comeback because a lot of tenants are seeking smaller spaces that offer flexibility, proximity to their customers, and that institutional investors were starting to warm up to that product again. They traditionally overlooked the smaller bay assets with lots of tenants because it was more management intensive, but now some of them are open to investing in that type of product because smaller builders distribute risk and provide consistent cash flow, enable owners to capture rental rate growth faster. So we talked about the big box at the other end of it in terms of the Atlanta market and Southeast. Are y'all seeing that more demand for smaller bay product?
Yes, there's lots of demand. Projects we've worked on around Atlanta that really are geared for called 100,000 foot tenant and up. We get calls all the time, people asking for 20, 30, 40,000 feet. And frankly, knowing the neighborhoods we're in, I don't know where to tell them to go. Used to always tell them, hey, call Shaheen, and they'd go find their space, 20,000 feet or whatever. Nobody's built that product in a long time. You're starting to see one-offs get built right now, but we've got several developers that have asked us, hey, can you go find us 20 acres to go build, whether it be 20, 30,000 foot buildings, like an old traditional metal park, but a little nicer these days, or an inline multi-tenant building, 100,000 foot, 150,000 foot multi-tenant building built for 30s and 40,000 foot tenants. Very difficult with the way construction costs have appreciated, the way landowners' expectations have appreciated to make those deals pencil. But there's an absolute rush of developers who want to go build that product because they know the investor market is there to buy that product from them. It's turned on a lot as a new asset class. I'd say iOS just came on with hair on fire. As an asset class, I feel like the small bay distribution is in the same mode iOS may have been 5 years ago as far as.
So what price is that land coming from a suburban office building with surface parking that 3 years ago an apartment developer was buying? Or
I
where
looked
did you
at,
find the land?
I bumped across a site that had just come back to the market after being under contract in Oakwood. It's like the hardest 27 acre site you've ever seen with creeks and everything else. And I called about 5 people. 4 of the 5 made offers on it because they were the 5 people I know that want to go build small bay. A couple of them big boys. You know them all probably, but like a couple of them big guys. And they just said, if you come across something like that that's too hard to build a big, nice big building, call me. I'll fix it. I'll figure it out. And we made 4 of the 5 made offers, and the sellers evaluating what they want to do. I haven't talked to anybody outside of Atlanta. This is an Atlanta thing from my knowledge base, but Atlanta, it's very real.
It's interesting. I agree with you that it's compelling for the investment side. You diversify risk if you've got 5 tenants versus a single tenant. But I feel like on the downside right now, probably the softness in the market is the smaller tenant, the smaller user. Our demand almost feels upside down. The higher up the demand ladder you go, it's bigger deals. And what I'm seeing in some of our third-party leasing projects is some softness, certainly from inquiries and existing tenants. We had a tenant just go bankrupt and give the keys back. We've got another one that's saying they can't pay rent. I think the sort of macroeconomic effect of gas prices, inflation, tariffs, uncertainty, I think it's hitting those tenants harder. So it's interesting. How do you struggle with this conversation of small bay is coming back and there's a lot of interest in it? You're obviously hearing it from developer clients you work with, and what I'm seeing on the ground is the subset of at least the Atlanta market where there's the most concern.
Yeah, I don't know. And it's funny you say that. I don't work on any small bay. So I mentioned a couple of times that I've seen some small tenants come along to bigger buildings and ask if we could break them up. But of the 5 people I just mentioned that I brought this site to, I don't think any of them are actually operating a small bay. So a lot of this is what you read in your textbook, and you're saying you're feeling something different on the ground, which is
And look, maybe I'm not saying that all the small bay tenants in Atlanta are struggling, but
No, I hear.
I'm not seeing that with bigger 100, 200,000 square foot users, but I'm definitely seeing it in the smaller
Well,
side.
and that kind of mirrors the U.S. consumer, right? It's a little bit of a barbell economy from that standpoint.
Walker, our Friendship Distribution Center, that was one of our more successful projects. Obviously, a lot of it had to do with timing and capital markets and the fact that it was leased up by the time we finished construction. But would you consider that small bay product based on those building depths? What was our average tenant size up there?
It was interesting because it delivered right as the COVID effect ramped up demand. And the shallow bay buildings that we designed for 20 to 40,000 square foot users, one of them got leased by a single tenant and 100,000 feet. The other one, we actually did 3 deals in, a 50, a 70, and a 20. And the 100's coming back to us, and I've got a fair amount of interest to split that space to re-tenant it in a multi-tenant fashion the way it was designed. But I think we caught lightning in a bottle there a little bit because we were able to lease up a single building to a single tenant. But ultimately, I think what we'll see is those buildings revert back to a multi-tenant with some smaller bay tenants in them.
Found another good site like that, Hamilton. Would you and Walker be bullish on building another Friendship Distribution Center type product?
Yeah, I mean, we built something similar to that. I mean, it's all topography dependent. The reason that project is what it is because we had creeks out the wazoo running through it, and we had to chop it up into a certain way that basically required us to do some smaller bay stuff. I mean, one of the issues with small bay that some of the developers may or may not be aware of, we go build a 120,000 square foot building or 200,000 square foot building, want to chop it up into 4 or 5 tenants. And that TI cost is going to wear you out. I mean, it's going to be 25 to $30 a foot before you know it because the demising walls are so expensive. And office space now, instead of costing $80 a foot, costs $200 a foot. It becomes exorbitantly expensive to develop this shallow bay product. And the tenants are going to have to pay $10 a foot plus. And like Walker says, I think some of them have sticker shock now and their business.
I think so too.
Aren't as good as what they used to be.
Yeah.
So it's tough.
Guys, I appreciate it. Any other epiphanies about what's going to happen in the next 12, 24 months or anything else you guys are seeing in the market that's worth touching on before we wrap it up? So I guess as a takeaway, it's market demand, project location, tenant behavior, tenant preferences all coming together in terms of how space gets leased, how projects are getting developed, and understanding how tenants are making those decisions is ultimately what's shaping where the market goes next. Interesting conversation. Thanks for y'all's insights, and thanks for joining us on the Built on Better Decisions podcast.